Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's Thursday, April 19th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, I'm so glad it's earnings season. The news flow over the past couple of weeks, it's been horrible. It's so bad that CNBC actually put a countdown clock to Zuckerberg's testimony. I mean, I get the countdown clocks for the kickoff to maybe the Super Bowl. It's going to launch. Everybody's excited. Maybe the countdown for the Federal Reserve is about to raise rates, which influences trillions of dollars around the world. I can even see HBO putting up a countdown clock on all of their channels, highlighting the new season of Game of Thrones about to start. You know, I get those. Those are cool. They're exciting. But a countdown clock to Zuckerberg's testimony? Now, if you look at, you were forced to watch this since it was broadcast on every news channel, streamed everywhere, highlighted on every single news blog in the world. And you got to give it to the media, right? They're smart for doing this. They know there's, 2.7 billion people have Facebook accounts. Everyone's concerned. Over 1 billion of those people are active users, and they're pounding the table with headlines that this company has violated you. Your privacy is at stake. You need to listen to this. Although, you know, those billions of people on Facebook post everything they do every single day, including exactly where they are that minute by checking in, you know, probably like 20 times a day. And do all this on Facebook. But it's not their fault. It's not the people's fault. It's not their fault. Everybody knows everything about you, right? It's not their fault. Just like it's not the people's fault who made $50,000 a year and took out a subprime loan for $600,000-$700,000 that had an adjustable rate mortgage. It's not their fault they took out that loan. No, it's not their fault. And afford that loan, it's everybody else's fault. Who sold me that loan? It was all fraud. It's not their fault. There's no responsibility for them. It's like the people who took out student loans for $75,000 or $100,000 and then found out that, you know what, maybe I shouldn't be in a certain field that only pays $40,000 a year, right? But it's everybody else's fault. It's the government's fault. I can't believe it. These student loans, they're crazy. It's everybody else's fault. But it's never the people's fault. It's everyone else's fault, which is cool. And not to mention you could delete your Facebook account at any time. That's up to you, but nobody will. But Zuckerberg is the enemy. And look, Facebook, of course, they deserve blame. They deserve to get in trouble. But is anyone really surprised this happened? In today's world where big data analytics can pinpoint pretty much the exact time you go to the bathroom every day, and I'm not kidding. I am not kidding about that. They know everything about, they knew everything about you 10 years ago. I've written about this in my newsletters countless times. Target was basically able to find out when a teenage girl was pregnant based on her shopping habits. And I'm not talking about buying diapers or anything, but the very early stages to pinpoint exactly when she was going to have that baby. And the father went to Target and, why are you sending her coupons for? And they apologized. And, you know, that later found out that his teenage daughter, that was 16, was actually pregnant. This is a story from 10 years ago. What do you think they know about you now with everything you put online and everything? Shouldn't be a surprise. So I'm watching Zuckerberg and his testimony on TV like everyone else. And over 100 politicians showed up. Over 100 to ask him questions. Just needed to get their face on TV, even though not one of them knows anything about private policies or data collection issues we have in America. None of them. None of them. I don't know if you listen to the quote. One politician, John Kennedy of Louisiana. I have to pick on you, but I'm sorry I have to. He's a Republican. He said, here's what's going to happen when he talked to Zuckerberg. There's going to be a whole bunch of bills introduced to regulate Facebook. And you know what, Zuckerberg? It's up to you whether they pass or not. Because you can go back home and spend $10 million on lobbyists and fight us, or you can go back home and help us solve this problem. Right. So the CEO of the most powerful company in the world, and yes, they are the most powerful company in the world, you want that person to come up with a policy that regulates his own company? Is that what you really asked him to do? I mean, if I was Zuckerberg, I would have responded and said, again, not to pick on John Kennedy here, who voted for you? I mean, you're in charge of regulating stuff, aren't you? Regulating Facebook, data collecting, privacy, and you're asking me to come up with the terms of the deal? I mean, I wonder what Facebook's competitors were thinking. Because if I'm able to make the rules for the financial newsletter business, I would advise that nobody with under 20 years of experience or without a background of financial analysis should be giving people stock advice. That eliminates about 95% of the industry for us. That's great. We'll be the best in the industry if you want me to regulate my own industry. Are you kidding me? I mean, I can picture John Kennedy leaving his house on the day of that testimony and, kissing his wife goodbye and saying, hey, I have to ask Mark Zuckerberg a couple of questions on TV. Make sure you watch it, honey. In the meantime, maybe you should have gone to your kids and asked them what questions they should ask Zuckerberg, since they know everything about social media. Probably post on Instagram every minute of the day. If you're out of the loop, Facebook owns Instagram, which has close to 1 billion users by itself. I remember when they bought that company, they wanted to have Zuckerberg's head on a platter. Fire him. He has no idea what he's doing. He's paying $2 billion for this company. No sales. What was it worth? Like 30, 40 billion? What is it worth now? It's great. I love the people who give advice on whether a CEO should be fired or not. And those are usually people that don't run a company, have never run money, and haven't done anything in their lives. And they're giving advice on whether Zuckerberg, who created the greatest, well, I wouldn't say the great, but one of the biggest companies on the planet, you're giving advice to him and everybody else, or whether that guy should get fired or not. Really? Man. I love it. This is some of the news I've been watching on TV. Next story. I learned that the Democrats still believe that they won the election, which is awesome. And James Comey, former director of the FBI, being interviewed by George Stephanopoulos, saying that Russia played a role in the election. Hey, forget the fact. You look at Comey, the only reason why he's doing a national interview is because he's promoting his new book, which, by the way, is going to be the last paycheck the guy ever receives if he lives in America, since he's throwing Trump under the bus and then decided to investigate Clinton's emails, what was it, a week or two before the election? Which Clinton still says, right? Hillary's like, that's the reason why I lost. She still says it today. That's the reason why I lost. And forget the fact that your campaign sucked. You're campaigning in areas in the final days leading up to the election that made zero sense. You didn't use data analytics that would have told you, you know what, maybe you should be in Michigan. Maybe you should be in New Hampshire. Maybe you should be in Pennsylvania, like Trump was those final days, because that's what the data told him. States you lost by a combined 1.9%. But nobody in their right mind is going to hire Comey. And being interviewed by George Stephanopoulos, who's a diehard Democrat, former Democratic advisor on a network owned by Disney. I mean, I get it. I know you need to bash the current administration headed into midterm elections. And you do this by looking at polls of what people want. I get the bashing of both Republicans and Democrats. They both do this. If you remember in 2014, when Obama was president, Republicans were crushing Obama in the media about the economy, foreign policy, the fight against Islamist militants in Iraq. I think they brought up that, he wasn't born in the U.S. again. I love politics. I mean, so much so that they basically, it was so bad with Obama that during the 2014 midterm elections, the Democrats that were up for re-election running those elections, they avoided Obama. They avoided the president because his ratings were down to the lowest level they've been since he's been president. And they separated from him and say, we don't want him near us. Get him away from us. Think about that for a minute. Politics. There's no loyalty at all. Only to your job and to keep it. That's it. That's the only loyalty. Republicans and Democrats. But as a Democrat, do you really believe that the people on the fence who voted for Trump instead of Clinton, right, that were on the fence, that the Russia angle is the best way to get those votes back? I mean, let the Russia thing die. You have so many other topics to grill Trump on. Playboy models, hookers that Trump had sex with, polls showing that people are unhappy about the latest tax cuts because it's 100% for the rich. You have the trade war, which Trump is imposing his tariffs himself on foreign nations that, you're saying is going to lead us to a depression again and the world's going to end. You can go after his leadership skills since he fired like every member of his cabinet. You have numerous tweets every day that Trump posts, every day those tweets that you could rip on. But the Russia story, I don't know, whatever poll is telling me to keep that thing alive, I mean, it's probably being funded by the Republicans. because it's just so wrong. You'll never win that argument. It just screams that you're being a sore loser. And I don't know what poll tells you that. Keep bringing up the Russia. I mean, you lost the election. Get over it. It's like Tom Brady complaining about the Eagles getting every call in a Super Bowl when your defense gave up 41 points and more 500 yards during the game. I mean, you only stopped the Eagles one time. If you want to blame everything, blame your defense. Don't blame a couple of calls, which he didn't. But enough with this Russia thing. Man, I don't know what poll is telling you to keep that alive. And nothing's going to change on that. That's not the argument you're going to win. You can't prove nothing. But there's so many other things to attack other than that. And then in the news, which just the other day, we saw Netflix report. I'm glad it's earnings season, but Netflix I'm bringing up as an example because Netflix does the same thing every quarter for like the past 2 years. They beat earnings, they raise estimate, and the stock goes higher. And the same thing happens every time Netflix reports. I'm watching the media, they bring on tech analysts, and they have them live, almost like exactly when Netflix reports, which is sometimes 20 to 30 minutes after the market closes. So they're on there, they're talking about them, what they expect and whatever, blah, 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 blah. Some of them are sell-side analysts. So I'm not sure if you know this, but when a company actually reports earnings, they issue a press release. And it's probably like 3-4 pages. And it has 30 bullets, 20, 30 bullets on it about the current quarter, guidance, margins, earnings, sales, subscribers, tons of data, lots of information that can't be analyzed in a minute. And then Netflix reports, and the anchors go to these people literally 30 seconds. 30 seconds after that report is released. Right? That's what they do with most, not just Netflix, most big newsworthy companies. And they ask the analysts, okay, so what do you think, guys? What do you think of the quarter? And the analysts basically look which direction the stock is going. They'll maybe read 3 bullets if they have enough time to do that. I would look at current earnings, the earnings guidance of subscriber growth for Netflix right away because I can't read all 30. And if the stock's moving higher, they're like, you know what? It looks good. They beat another quarter. It looks good. It looks great. That's all these. And the stock's moving lower. They're like, yeah, I'm not too crazy about these numbers. They don't look too good. Yeah, the stock. This is after 1 minute of the press, of that press release, 1 minute. They didn't even look at the report. They just looked at the stock reaction, which I find awesome. That's cool. But specifically for Netflix, what I love is it's literally the same thing with the analysts. They go on TV, they analyze it, and it goes up almost every quarter, right? They report good numbers. And they're like, well, it's a good quarter. They're growing. International remains strong. It's the same thing for like the last 6 quarters. And then they all say, but you know what? I wouldn't touch a stock here. It's too expensive. Don't touch a stock here. It's too expensive. One by one. It's good, but, it is expensive here. I wouldn't touch a stock here. Seriously, the same analyst, the same thing every time. And they said it when the stock was at 150, wouldn't touch a stock here, it's expensive. At 200, don't touch it, it's expensive. At 250, and now it's what, 330? The same thing. They got, well, I wouldn't touch it, it's expensive. I mean, look, if you're telling people to avoid Netflix, or even telling people to short it, come up with a new thesis. Because, man, I have to tell you, Netflix, that stock just keeps getting more and more expensive every quarter. Every quarter gets more expensive. It's more expensive. It goes higher and higher and higher. I mean, when I look at Netflix, I'm not the biggest fan of this stock, but it's not because of how expensive it is. It's a massive cost. How they're not going to generate free cash flow for years. How they actually said, it's a big bullet, they need to tap the debt markets to spend more money on original content. Which means there's zero chance of the stock getting any downgrades by the sell side, since we're talking billions in investment banking business over the next, 5 to, I'll put a number on it, 20 years. And they're putting it up. They have great original content. I watch Netflix. I'm just watching a new series. It's, they keep putting up. It's great. But the expensive argument, there's no added value of going on TV and telling us that Netflix is expensive. There's no added value. What do I mean by that? You're not educating the people who are watching you 1%. Not even 1% by saying, going on TV and saying Netflix is expensive. So, sorry for the rant. Man, every time I try to put on something that's interesting to watch, it's crazy. So I'm very happy earnings season's here because it's going to get real crazy over the next few weeks. A lot of companies expect to report strong numbers. Like you see these names, despite the strong numbers, pull back a little. That's been the trend over the past couple quarters. And you know what? That's creating a lot of buying opportunities right now. So guys, pay close attention to this earnings season. Look at the trading revenue that Goldman reported last quarter. It was at the highest in over 5 years. And there's a lot of things that just don't. You look at energy stocks trading still down 35, 40% over the past 12 months with oil prices up close to 30% when all these guys are pushed out their debt 3, 4, 5 years from now. I mean, I think you could take a dart and almost make money in most energy stocks. So they don't have those liquidity concerns. They're generating huge cash flow because almost everyone could produce oil at 50. And we're pushing 70 now. Resource stocks, transportation stocks, infrastructure stocks, especially infrastructure on the heels of a possible $1 trillion infrastructure bill that's likely to be passed, hopefully, over the next 6 to 12 months. And provide a big catalyst for a lot of these companies that are trading at dirt cheap levels. You look at stocks during that last pullback. I mean, right now, the market is flat. It's up a little bit. Came all the way back, down close to 10% from the highs, and 7% overall. Now it's come back. But how many tech stocks do we see go down 20%, like Facebook, that I was very high on, telling you where it was below 160 with the headlines, and why you should aggressively buy it on the dip. Not always right. I'm wrong sometimes. I don't have to be right on. But a lot of names are going to see incredible earnings growth, a lot of tax reforms, business, incredible sales growth, very, very high sales growth, higher margins, strong fundamentals. And they're still trading at dirt cheap valuations based on what they're going to generate this year and next year. So pay very close attention to earnings season. Now, speaking of earnings season, cybersecurity companies are going to be reporting over the next few weeks. And right now, one of the biggest cybersecurity conferences taking place in San Francisco called the RSA Conference. And the pleasure of interviewing a CEO of a brand new cybersecurity company, just started trading the public exchanges less than 2 months ago. His name is Corby Marshall. The company is Hilltop Cybersecurity. So I met Colby at a dinner in Vancouver. Some high-profile executives that took us out to one of the best Indian restaurants in Vancouver. And he blew me away. He has a military background, distinguished graduate of the U.S. Military Academy at West Point, background in IT, including leading the marketing, consulting, sales teams for divisions at IBM, OpenTech, LabCorp, the Silicon Valley Insider, with extensive contacts. And he's bringing this military-grade IT that he uses in the military and that security to small and mid-sized companies through his new company, Hilltop Cybersecurity. One of Hilltop's top strategic advisors is presenting at this conference several times. She's director of security at Lucasfilms, Warner Brothers, forensic security lead at Microsoft. He's a big shot. He's speaks several times. So we're going to get the inside scoop of what's going on at this conference, which is great. Kobe's also going to talk about the privacy issues, which include stories that are going to scare the crap out of you in terms of protecting yourself against cyber criminals, not just in the U.S., but globally. He's also going to break down his company, which is a microcap, very risky. Just tell you why he started, what he's trying to accomplish, and how he plans on disrupting this incredible multi-billion-dollar industry. And in my educational segment, I'm going to teach you a little bit about investing that few people talk about. And it has to do with Netflix, something I just covered. But using this simple process is not only going to prevent you from getting crushed on stocks, but it's really going to help you understand why momentum names, when you look at Netflix, Facebook, NVIDIA, why they continue to go higher and higher despite trading at what the media will tell you are super expensive valuations. So it's going to be a really great educational segment. Definitely don't want to miss it. And speaking of education, let's bring on my buddy Corby Marshall, CEO of Hilltop Security. Quick note, he is in the field at the RSA conference on his cell phone, probably in some corner, doing this interview to give you the real-time scoop. Sound quality is going to be okay, not perfect, so don't email me. But I love talking to these guys in the field. Very, very important. Corby Marshall is going to educate you on why everyone listening to this right now will likely get your personal data stolen over the next 6 months. Corby, thanks so much for joining us on the podcast.
Brent, it's a pleasure to be here today. Thank you for the invitation.
Well, Corby, you are at the RSA conference, and I know you're on your cell phone right now and probably in a corner or maybe in your room, and I really appreciate you doing this interview. I love interviewing people in the field when they're at conferences. I want to get to the RSA conference in a second, which is one of the big cybersecurity conference, and I want to talk about your company, Hilltop Cybersecurity, in a minute. But why don't you since you're a first-time guest, give us a little bit of background of what made you get into this industry? Yeah, how long have you been doing this? Because you have a fascinating story that you told me that I want to really share with the listeners.
Okay. Well, absolutely. So Hilltop Cybersecurity is a company that consists of primarily U.S. military, including Army, Marines, intelligence community resources. And our background really was we began our CEO began to work, in the Department of Treasury at UPS and did various projects that were building software around financial anomalies and fraud and abuse. And we did other work for the government in the past. And essentially, we came to a point where we realized what we had built had a commercial value to it that would allow a small, medium business to have a fighting chance in the cyber war that's really going on right now. And that we decided, instead of taking the route where you find the 100 biggest customers, we wanted to find the customers that need us in our help the most and target them and build our product in such a way where it could help them, identify early, not in this case, but the technology allows you to look for things like data exfiltration and things that are not so much signature based, like a lot of our competitors are, but more is based on behavior that's going on inside a company that should alert somebody to say, hey, there's a problem here. And our whole goal was to use this rich background we had and have, in the past to apply that to a problem set for our current customers.
All right, now you're at this conference, RSA conference, big cybersecurity conference, and you actually have one of your strategic advisors speaking several times. What are you seeing at the conference? Is there anything different? We all know, is it like the big thing about Facebook being talked about right now with of course, with Zuckerberg and testimony and stuff like that? What are some of the main topics? Because, it seems like finally it's becoming a big issue that people care about, where I think everyone kind of waits until something happens. It's almost like taking preventative medicine, right? It kind of like, they're like, I don't know if I want to take this because I don't have anything yet. But until you get hacked, you don't understand. What do you learn about some of the trends, or what are people talking about at this conference that's different maybe from the past?
Well, I think a good analogy would be the Titanic. The bit of ice that was poking out, it seemed almost dangerous, and it didn't seem like much of a big deal until the ship's on the bottom of the ocean. And the reality is that, $86 billion was spent on information security and cybersecurity in 2017, and it's going to rise to $170 billion in 2020, and it's not going to be enough. I mean, if the war that is going on in the cyber sphere was going on physically, we would have tanks and soldiers everywhere. And the battlefield is the businesses. The WannaCry virus hit 300,000 computers in 200 countries, and it was indiscriminate. Like people who didn't have the appropriate patches for an older Microsoft product, and so I believe that it's more of a lack of education and a naivety about what's actually happening, as opposed to it's becoming popular. And I think as people are more and more switched on about just sort of being understanding what's happening, it becomes obvious that it has to become a very high level priority. The bad guys are getting really good, really fast, and they're getting organized. They have 1-800 numbers. They have customer service. They have product roadmaps, and this is the bad guys. So I believe it's just a lack of education, and I think that that's what we're seeing as it becomes a more important topic.
Now, how vulnerable is a normal person? Because I've gotten hacked for more than $25,000 on one of my brokerage accounts, and obviously the brokerage account, kind of their fault, but somebody actually hacked my emails, went in, pretended they were me, and cut off everything that came from this company and automatically filtered it to spam. So even when they responded, I didn't know. Whenever I do wire transfers, through my brokerage accounts and invest in different things, they usually call me first, and we talk over the phone. But sometimes I'll mention an email. They decide to send this one just with an email. I didn't realize how vulnerable I was and how this could actually work, which was incredible. I mean, it's unfortunate for me, and I'm glad I got paid back from the brokerage firm. They did the right thing. But how many people really don't know how vulnerable they are? Because it seems like it's a lot easier than what people think, even with some of the systems that they're using to steal the data.
It's a great question, Frank, and I think everyone is vulnerable, and I think every business is vulnerable. And the number one vulnerability, the weakest link in that chain is always going to be the people within that chain, because people don't like to change their passwords. They don't like to follow security measures. They make it simple for themselves. Those are the obvious things, right? And then the other side of it is it really depends on who wants to get at you. If it's just, a disgruntled teenager with a Red Zone Mountain Dew in his parents' basement and he's mad and he wants to run around, and he or she's mad and wants to just run around and run amok, that person has the ability to affect individuals, consumers. There certainly are some measures and countermeasures in place for businesses. But as you move up that pyramid of sophistication for the bad guy, at a nation state level, their penetration of a system they target is 100%. And although there's never been 100% attribution of North Korea to the Sony hack, which everybody's aware of, and which seems to be tied to the movie The Interview, and I would guess that even though Sony's very sophisticated relative to most businesses from a cybersecurity perspective, they're organized, they have good people, they have a SOC mentality or a security operations center mentality, and I can guarantee you they never saw it coming. So I think everyone's vulnerable, and I think everyone can be hacked, and I don't think if you have this notion of you're safe, you just don't understand the landscape. And what we like to do with our customers and consulting with them is we like to reduce their attack space or their vulnerability, like what can be hit, because then it's easier to pay attention and harden the things that they can get into. So I think everyone is my answer now.
Yeah, so let's get more into your company here, because with Hilltop Cybersecurity, I know that you have, from speaking to you, you have an amazing background for contacts and insiders, Silicon Valley, and a lot of the top tech entrepreneurs out there and stuff like that. What made you start this company, and how do you believe this company can be different from Palo Alto's, Symantec, all the other players out there that offer these suites of securities? What can you actually do as a smaller company that's going to basically, move the dial or be disruptive in this industry?
Great question. I would attribute a lot of the differentiation to our tech and to the people behind it. My partner, Neil Wright, who is our CTO, he was actually, his last project outside of government-related work was with UPS. And in that instance and in that situation, he was taking some 24 million packages a day and the 300 pieces of data per package associated with those packages, and identifying fraud and abuse, identifying financial anomalies. And it's sort of that mentality that helped him build our product, Valbon. And our product is very robust. It has intellectual property. It's been deployed in situations with the government that are extremely hard to pass muster. So it's a very mature and robust product, even though we're a very new company. So we're coming out of the gate with a really strong product, as opposed to, hey guys, someday we'll build a good product and then hopefully we can sell it. So, I believe that's a big differentiator, and we're a very serious company. We do this. It's our chosen profession. We want to help people. We want to help our customers do more with less, because the small, medium business, which I define as under $1 billion for our purposes, they don't have the resources that a Sony has or that a Department of Defense has. And by the way, like, when anybody says, oh, they're not going to get to me. I mean, the office of OMB, which is probably one of the most sensitive areas in the government, was hacked, okay, significantly in the past. And that was a big deal, but people don't realize, like, how hard to do that it is. And so we believe that we're just trying to switch the odds in the favor of the businessmen and the business and shareholders of those businesses and give them a fighting chance on what's becoming less and less signature-based attacks and more things people haven't seen. And even this week in the news, there was some, a notion that there was a Russian-backed attack that hit a lot of people. It's going to continue to happen. It's just, you're going to see that more and more. And it's one of those things we driving a car is an inherently dangerous thing, but we still do it. And you just have to, train. You have to have proper safety equipment, your lights, everything that you can, and you do the best you can. And that's, I think, you're going to see increasingly a need for those sort of mentality, and I think we're gonna play a role in that with that small medium business customer.
Now, Corby, what scares the hell out of you the most? Because I have a couple of friends who are hackers. One specifically is an amazing hacker that was hired by Google. He works for the defense company. He works for Facebook, who's a very close friend. I asked him the same question. Some of the stuff he says is amazing. But, I mean, when we're looking at hacking where everything is going on the computer, forget about personal stuff. When you look at, what scares you in terms of the defense, since you have a military background? Is it your utility grids? Is it credit card processing facilities, which are massive, and people don't realize they basically run our world? Imagine shutting down all credit card facilities when nothing would work. I
think it's very segmented. Like, so from a type of malware that I find disturbing, we're starting to see attacks. Remember my earlier assertion that the weak link in anything is people, because of our we don't want to change our passwords. We don't want to make them super hard. We don't want to remember them to write them down. So that's always a vulnerability. And in that same way, phishing attempts, those kind of things, they rely on somebody opening up a spreadsheet, an email, and it says, "Hey, Joe, here's your spreadsheet. That's Fred." And then the person clicks on it, and then the malware attack starts. There's some new malware we're starting to see, which we describe as fileless, which doesn't necessarily require interaction from people. So that's pretty disturbing. And I find that pretty alarming. And we've started a notification product to help customers hunt those sort of things proactively, as opposed to wait and see, because it's a pretty that represents a major escalation of the bad guys. And then in terms of when you talk about infrastructure being vulnerable, I mean certainly that's outside the scope of what we can really do, but that's quite frightening to me, because you've moved to a place in terms of our dependency on technology that disruption isn't just I can't check my email. You're starting to see a physical manifestation of what cyber can mean to people, and it could be power or water or things like that. And of course, we find that very disturbing and frightening. But we're very focused on trying to just stay within our lane with our customers and just do what we can. But there's a lot of scary stuff out there, right? And we just keep in the middle of the road and keep our lane, and we just try to build the best products we can and bring the smartest people in to consult with us. So that's what we're doing.
No, it definitely makes sense. Now, how important, since you are, let's talk about the things you are targeting, which is under $1 billion businesses, right? Small, mid-tier businesses. How important is it for you, which I see sometimes when companies do start up, where they put their egos aside and just say, we need to hire the greatest team. And when I look at your advisory board with guys like Pete Herzog on it, Michael Panico, talk about how important that is, because these are, and I think it's Pete Herzog that's actually, very, guys, you could look him up on the internet, is very well known. But he's the one who's making a couple speeches at the RSA conference for you guys, right? Who's on your advisory board?
Yeah, and it's incredibly important, because I believe that how we're going to be successful as a community of cybersecurity professionals is that we're going to change the dialogue. Okay, we're going to change how we define the problem, because in the past you looked at things like and you hit the nail on the head. It's this small medium business. Some of them, if you talk to the CEO, he's like, well, we got McAfee, we got Norton, we're covered. Well, and as long as you have an attack that's something that signature-based malware detection or antivirus has seen before, sure, you're good to go. But the reality is that's increasingly less common. And so it's more and more about it's more and more about like being able to proactively see things that are wrong, but it's not necessarily a specific code or signature. And Pete Herzog's work is amazing because he has a premise of an OSTEM, or it's sort of an open source. The concept is to build sort of a common set of threads in any security strategy and platform. And that OSTEM, which as you said, he's really easy to find on Wikipedia and also the other organizations he's involved with. But we love this whole premise because it plays right into also things that our product does. So our product risk scores threats. So if we have 10, so it's kind of like if you had 10 people to address their threat level in a room. If you have an equal knowledge of all 10, then you can't really do a good job of deciding which one to do, to work with first or to address first. And that's what Austin and his premise is that he teaches on Hacker High School and all the different forums that Pete's so instrumental in, is all about risk scoring and subdivision of the threat in order to make the surface area smaller to where a smaller team can actually make a difference. And that's 100% what our product is about. And then we actually have patented a technology around that called isotope testing that is very much about reducing the variables to where a smaller team can actually do a better job and have a fighting chance. And some of these businesses just don't invest in cyber right now. I mean, it could be a 500. I had lunch today with a gentleman who owns a $500 million business in Georgia, privately, and honestly, he's got some IT guys which he thinks might know something about security. But the reality is, that's definitely a large enough business to be vulnerable, and the bad guys are increasingly looking for these soft targets, like the small medium businesses, because they're the bigger customers, a GE or a GM or a Tesla. They're going to have a lot in place and a lot of resources. So I think that that it's very important that the expertise and the thought goes into that as opposed to just go out there and do stuff.
No, it definitely makes sense. And let's get to the last question here, because you also have something that is important, which is small business when you think about it. But cryptocurrency, right? I mean, you're seeing how much cybersecurity in this space because it's not regulated. The SEC is coming out with regulation. You're seeing it come down, which is normal because you're getting a lot of the BS out of the industry because you could pretty much rob people and no one's going to track you because there's no regulation. But talk a little bit about that, because sometimes I feel like you get linked as a cryptocurrency and now you're not, which is cool with your stock price where you saw a lot of these companies come down. Talk about the technology. I don't know if that's patented too, if it's biometric, but it's is military grade security to protect, what is it, the transactions, cold storage, recovery, lost wallets, and currency. Something that's a really big deal I've seen in the industry, right?
Yeah, and I think you're right. I believe we've been kind of lumped into cryptocurrency mining companies and providers and people who will look at Dash and all that kind of stuff. And we never wanted to be in that space. We're not in that kind of space. How we see cryptocurrency is if our customers decide to go in it, it's a particularly tricky area because it's a tricky thing to guard. It's a tricky thing to protect. And the existing technologies, we've done work with the Department of Defense and with the various organizations, and we kind of know what's good and what's the best. And when we looked at what was out there, we weren't happy with any of it, so we actually kind of went back to the drawing board. And as you said, we built a wallet that we have a prototype that we've built already, and we're working towards the functional version shortly. But basically, it is a 4-factor security. It has traditional sign-in. It has biometrically signed blockchain, so it's an immutable device. It also ties when you sign it a GPS signature into the blockchain. So if Frank's supposed to be in Boston and for some reason you're trading in Estonia, shuts down, which would have actually probably prevented about 50% of the cryptocurrency theft that's read about, the huge one in Japan, et cetera. And then the last piece is it has a concept of recovery to another device. And as you said, the keys and the coins are both cold storage. So the device doesn't actually have any underpinning value that you lose if you lose the device or break it or whatever. And that's not true of a lot of the other existing hard wallets. Some of them you lose them, you lose the money. Some of them you lose them, you can't sign in, and you might as well have lost the money. So, we're excited about that area. But again, we're focused on cybersecurity for our customers and how that plays into it, not, the Swiss Army knife mentality where, hey, well, let's go play soccer. I mean, we're focused on what we're about and what the ethos of the company is, and it's just an extension of that continuity. And then the code that we've written around cryptocurrency that ties into Valmont is the same. It's just for that reason, not for anything that kind of takes us in a different direction.
Nah, that's great stuff, Corby. And I tell you, we'll end with this. If someone wants to find more information about your company, how could they do that?
So our website is hilltopcybersecurity.com. We're traded on the CSE, and our ticker is CYBX.
And that's perfect. And Corby, listen, I really appreciate it. I love when I interview people and they're in the field. I know you're on a cell phone and stuff like that, which is cool. It's nice if but it's fantastic because you're really giving an inside scoop real time of what's going on at a major conference that nobody's really talking about, right? I mean, it's funny that they talk about Zuckerberg on the Hill, but yet a lot has to do behind the scenes as this conference going on. And I really appreciate you taking the time to, give my listeners a scoop.
My pleasure, Frank. Thank you so much for your time today. Really appreciate it. I hope you have a great day.
Okay, guys, great stuff from Corby. Again, the sound quality I wish was a little bit better. It is from a cell phone. It is in the middle of a conference. I love getting that real-time stuff. And it's amazing because maybe I should share this more often. I'm going to find ways to share this with you. But before and after the interviews, I usually talk to my guests, and which is offline. And I'll say, okay, I'm just going to, maybe we'll go here or here. They'll tell me a couple of things and say, hey, even before our conversation, I said, what's going on at the RSA conference? And he mentioned a couple things. And I said, okay, let's get into that. And then after it, I said, so, what's the rest of your schedule look like and things like that? And it must be pretty crazy there. And I think he said there's a record amount of people there at the RSA conference. But he said something that really stood out, which I want to share with you. And again, I wish it would have came out online, but he just thought about it. The initial speech, I think the keynote, was from President Amit Yoran. So he's a chairman of Tenable Network Security, a very big company. He was a president of RSA, which was acquired by EMC, and this is the RSA, the cybersecurity conference. Yoran was also a National Cybersecurity Division Director with the United States Department of Homeland Security under the Bush administration. And Colby was actually his squad leader at West Point, which he was telling me. I thought that was a good story. He went up there, and there's over 40,000 people there. And his first line was, we failed as an industry because nothing is safe right now. That was his first line. That was pretty amazing. So he just told me that when we hung up. I just want to share that with you just to let you guys know. Protect yourselves. Find ways to protect yourselves. I use LifeLock now, which works for me. It's very easy to steal information. And I know a lot of hackers in this industry. This is an industry that's ripe, not just for stock gains, but also, personal businesses, record spending keeps going higher and higher. Not a week goes by where you don't hear about another major hack of a company. These guys are already spending millions of dollars to try to protect themselves, and they can't. So there's always someone out there smarter than you. And I just wanted to go over a little bit of the industry things that I see and my personal experience with that. I'm glad Colby did a great job explaining the dangers. But full disclosure with this company, with Hilltop, I'm an early investor, just like I was like an NAK and things like that. So I can't sell shares because I'm locked up. There's a lot of people that are locked up in this, which, the early investors who sometimes like to sell right away are out there. So, that's probably going to take place, I think, in 2-3 months when that gets lifted. My point is you could see a little bit of pressure on the stock during this period, so don't buy it now. This is a name I wanted to bring in front of you just to show you some of the things that I invest in and companies that have the chance to disrupt markets, because he has a great following. He's very big. He's got amazing contacts. Again, he's a squad leader of Amit Yoran, who's a national cybersecurity director for the United States Homeland Security during the Bush administration. The contacts that he has are amazing, and he wants to start his own company and bring that military-grade IT security to small and mid-sized businesses. And he's doing a great job. But if you're interested in this company, look, I know some people are going to go out there and buy it. That's fine. Symbol CYBX. Again, it's on the Canadian exchange. scale into it, if anything. But you might see a little bit of selling. There's some people that like to, right after their lockup period, they just, some the short-term investors. A lot of those guys are usually long-term, but you see with Canadian-listed companies, sometimes you can see some pressure. So just be careful. Keep it on your watch list. But when it comes to stocks like this, I just want to show you what I'm doing because, I own a position in this stock, but I own a position in many stocks I recommend in my newsletter. I never have an advantage over my subscribers. Buy ahead of you before recommendations. I recommend them first and then buy them after you get in, or I never sell ahead of my subscribers, which is in our policies. But I'm a believer in having stake in the game. I know America Toots is a believer in things like this. I know there's a few other newsletter writers. I would say this: if there's a financial publisher that tells you their editors can't buy stocks they recommend to subscribers, you should probably cancel your subscription. And I mean that. I'm not saying anything. Think about it. If they're telling you through a promotion that the stock they're recommending, it's going to go up 10,000% in 6 months, and I've actually seen some of those claims, which is insane, right? 10,000% in 6 months. If that's really true, I doubt they would give that name to their subscribers. Instead, they'd buy it for themselves. Because they can't buy the stocks they recommend in their newsletters. So it's just something to think about and be careful with. At least I know subscribers, I like to see it. Like if someone tells me to invest in something and it goes down, I'd like to know that they're invested in it too. And if it goes up, you should participate in that. But these are the companies we want to recommend, things that I really believe in, truly believe in, investing my own money in. And I like sharing a lot of those ideas, especially with these, with Hilltop, because I like investing in a lot of speculative names. You only need one hit while limiting your losses on other positions by using stops to really make life-changing gains. And I've hit on a lot of these. So what we do at Curzio Venture Opportunities, you can get into a lot of these names through private placements, sometimes very early rounds, which reduces your risk. So that's why sometimes I like bringing on CEOs of companies like Corby that you won't see mentioned on, anywhere, CNBC, Bloomberg, any blog, until that company becomes much, much bigger, right? Then everyone wants to talk about it and what they're doing, and it becomes a momentum name. But just looking to bring you new ideas and stocks I like to invest in over the long term with great management teams and the potential to disrupt markets. Now, let's get to my educational segment. Because earlier I talked about Netflix, the strong earnings report they had, or how they report strong earnings every single quarter. Then what do? They raise guidance, the stock trades higher. And they always have these analysts go on TV and they say the same thing after the quarter. Great quarter, they killed it, they did this, international sales are adding subscribers, blah, 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 blah. And they all finish their last line and say, I wouldn't buy it here because it's too expensive. And I wouldn't buy it here. And they said this when the stock traded at 150 after the quarter, at 200 after the next quarter, 250. Yeah, I won't buy it, too expensive now, 320. And the stock just keeps getting more expensive, but it would have been nice if some guy went out there and said, you know what, it's expensive, but you know what? The growth behind this company is incredible, where they could disrupt the entire way people watch TV forever, and they just captured still a small part of the market. And if you go out on a limb and say, yeah, this thing could still go a lot higher at 150, now you're sitting on a stock a few years later that's well over $300, and it's doing good. Reported earnings up 10%. Remember, guys, when you want to make money on these stocks, Apple right now, you can look at Apple and say, wow, Apple trades at what? I don't know what it trades. I haven't looked at it. 13 times earnings. I'd say you back out the cash, maybe 9, 10 times earnings. Well, in 2004, Apple traded for about 65 times earnings. It was an expensive stock. Nobody wanted it then. It's too expensive. If you bought it then, you're probably sitting on 2,000-3,000% gains. Netflix was an expensive stock in 2004 as well. Celgene. I went over these examples with you, showing you just because a stock's expensive doesn't mean you shouldn't buy it. You have to make sure it's growing, and Netflix keeps putting up amazing numbers. So expensive, yeah, it's trading at 78 times forward earnings. Market's trading at 16 times forward earnings, a little bit under that. But the way you make money investing, the reason for this educational segment, is by finding out the story that nobody is talking about, not investing in the one that everyone knows already. And so telling me that Netflix, I wouldn't touch it, is expensive, you could hear that story a million times. I'm sure if you put it in Google, there's going to be like hundreds of millions of results of how Netflix is expensive. It's already priced. People know that. They know it's expensive, and that's not why it's coming down. So if you're going to short a company like Netflix, you have to find out other reasons of why you would short that stock. Same with Tesla. Same with a lot of these momentum names. It can't be because they're expensive, because they were expensive for the last 5 years. And while you said they were expensive, they're up 1,000% right in your face. So you can't go out and say, wow, these are expensive. Don't ever say that. I've learned that. I was fortunate. I was lucky. I grew up as a value guy, value analyst, cash flow, balance sheet, dividends. And then when I went to Kramer, who's a growth investor, I understood and was taught over 5 years, crash course, analyzing 2,000 stocks a year for his show, of how important you have to look at growth. So now I'm trying, when I do my news, I merge those strategies, have value with growth components. And that strategy's been working and worked for me for a very, very long time since I've been in this business. But you have to look at that growth. It's very, very important. But the point of this segment is you can't avoid Netflix because it's expensive. You can't avoid Tesla because it's expensive. I told you other reasons why I don't like them. They just don't have enough cash. They don't have, I mean, the recalls, the amount of debt they have to pay, and more important, their technology is not proprietary. It's not like, I've been to Consumer Electronics Show with Tesla, and I've seen these beautiful electronic cars now. Everybody's building them. They're rolling them out like crazy. They have no proprietary, like they did at the beginning, being first to the market. There's a lot of great companies with big, healthy balance sheets that are challenging these guys. So it's not, well, Tesla's expensive. Don't ever short a stock because it's expensive. Don't ever buy a stock because it's cheap. You have to find those cows. You have to find other reasons. For example, I mean, you could look at 2012. What do we have? The sequester, right? It was a huge story. They're capping the federal budget. You have to have automatic spending cuts are going to kick in. And lots of these cuts were taking place in the defense industry. So the bill was scheduled to pass on January 1st, 2013. 2012, you're seeing these companies get hit in the defense industry. And analysts in the media, even sell-side analysts said, these companies are in trouble. They're going to. It was so negative on defense companies. For me, I was extremely bullish on this industry. Why? Because sequester was being talked about for 18 months. And in specific segments that were going to get cut because of the budget, every single management team on these defense companies knew about it. They knew it was there for them to see. So what did? Well, they adjusted their business models. Company like Lockheed, instead of making these jet fighters like crazy when we're not, we only use during war times and we have a huge supply of them. Oh, and not in a war. You know what? They switched to IT development, services, combat system, logistics, drones, money that's pouring into these sectors. And the point is, defense companies saw these cuts coming and they adjusted. And look at the performance from 2013, right? When everyone said, oh man, the defense companies sequestered so much trouble, money coming out of defense budget. That performance is insane. Look at Northrop, Lockheed, Raytheon. Since 2013, compared to the S&P 500. They blew it away, the major index. Kind of a safe industry, right? You got these revenues always coming in. Always able to grow earnings. They pay high yields. And they fell. Why? For reasons that the whole world, especially the management teams of these companies, already knew about. And look at Big Pharma, the patent cliff. All these drugs, what was it, $400 billion in sales coming off patent of these drugs the next 5 years. Same thing happened. People say Pfizer's going to get killed. Merck, Glaxo. These names are supposed to get destroyed. There's a fundamental change in their business models. They're top-selling drugs. They're going to be so much trouble. They're not going to be generating this revenue. And there's tons of their blockbuster drugs coming off patent. When they say blockbuster, that means sales in $1 billion or more in 12 months. So what does that mean? It means generic companies can come in and copycat these drugs and sell them for 1/10 of the price. And we say, well, how do they do that? I don't understand. How do they make profits? Well, they don't have to go through the whole marketing, manufacturing, the trials, the cost that these giants spent billions on to get this drug to production. If you look at Big Pharma, they saw this risk coming. They see the exact date. I mean, it's not difficult to see since your drugs have a patent of 20 years. And you may be saying, wow, that's a long time for a patent. It's not really, because it takes an average, I think it's between 8 and 12 years around there. I mean, there's studies I've seen 8 years and 10 years and 11 years to bring a new drug to market. So when you file that patent, that's just the beginning. All the trials through phase 1, phase 2, phase 3, the clinical, all this stuff, all these tests, you're going to have setbacks. More money goes into this. So you're looking at what, like 10 years for all that stuff to happen, maybe another 3 to 4 years to make their money back of everything they spent. Then you have a good 5 years, a little bit more to profit as those profits roll in. It seems like 20 years is a long time, but they really only have like a window of 5, 7 years, 8 years to sell, maybe a good 4 years to really make as much money as possible. Now, how did they deal with that risk? They changed their business models. They raised dividends. They issued buybacks, which pushed their stocks higher since interest rates are low and, that higher yield. People are rushing to those stocks over the past 5, 6, 7 years. And buybacks artificially increase your earnings. But more important, they also invested in small biotech companies. This explains why the biotech revolution took place. I mean, you look at that sector through the roof over the past 7, 8 years. Maybe 2011, 2012. Punch of any biotech ETF. So they invest very early in these companies, which cost them $5 million. They have fortress balance sheets. All right, let's invest in 20 of these, $5, $7 million each, $10 million, whatever. The drug show promise through phase 1. Maybe they might wait to phase 2. Then they can use those big balance sheets to buy these companies in the very early stages. Now they have those rights and they can bring those drugs to production because they already have the platforms. They know how to do it. It could be a lot quicker for them. They can enjoy maybe not 5, 6 years, maybe 7, 8, 9 years of those revenues coming in. But if you're looking at that huge risk, what happened? These companies outperformed. They did fantastic. Pfizer's okay. Merck a little bit underperformed. Glaxo's been on fire. And you look at pretty good results out of these companies of an industry that people thought was going to get destroyed from generics. Because they saw the risk coming. It was priced in. And you've seen the headlines at the patent risk. If you see that risk priced in, you're a management team, you know how to adjust. I mean, cord cutting is another example. And I used to laugh at cord cutting, the people who really never get cable in the first place. And if you look at the percentages, it's like 2-3%. There's still over 100 million paid TV subscribers at cable. And cable companies saw this risk coming, so they started their own streaming services. If you see the risk coming, it's factored in. Use those headlines to your advantage when you see shit like that. Use it to your advantage. Let them print whatever they want. You're never going to stop them. They're going to write anything they can to have you open up a story. That's fine. But use it to your advantage. What you're seeing now is not one person that's telling you that the market's cheap. Nobody's telling you the market's cheap. And you know what? There's a lot of cheap stocks out there. It's a great opportunity to buy. That's my point. So you're going to invest, even if it's on the short side. Don't short Tesla because it's expensive. The whole world knows it's expensive. Don't short Netflix because it's expensive. Hey, Alkin is the best short seller in the world, I believe. I mean, it's incredible. We'll be the first to tell you that. Because he had so many learning experiences. Even one of his best calls ever was to short the for-profit education space. And just like we saw, if you ever saw the Big Short, like that early period was tough for him. Those stocks kept going higher and higher, even though he knew it was all BS and a lot of it was fraud. And then it happened. But now you learn, like, okay, maybe I could have been a little later to that. Maybe you understand you got to find other reasons of what's the catalyst that's going to trigger this. And use those crazy headlines at people, right? And you see in the media, to your advantage. They push stocks down pretty easily, and it's going to give you a chance to buy a lot of great names at dirt cheap prices. Okay, guys, be sure to check out my Curzio Research Facebook page. Posting live videos, doing a lot of cool stuff. Going to try to do live Facebook interviews. Also going to try to provide that on Twitter. We're going to push more videos on our website, like introductory videos and things like that with getting a lot of video stuff that's going to happen. You're going to see probably over the next month or two, and I'm really looking forward to it. But, of course, you can see a lot of things that we post and free stuff on Curzio Research Facebook. Also on my Twitter account. My handle's @FrankCurzio. Like I always say, I have strong opinions on things. As long as you're not cursing at me and stuff like that, I don't delete. I like when people have different opinion than me and stuff like that. It's always cool. Plus, you get your emotion out, which is always a great thing. Get it all out. Okay, get mad at me. Everybody's too serious in this world. So if you make fun of me, yell at me, it's going to make you feel better. Go ahead and do it. Do it on Twitter. Do it on our Curzio Research Facebook page. Perfectly fine. I promise it's going to be entertaining, especially the live Facebook videos, which I love doing because they're live. So if you make mistakes, you make mistakes. It's cool. Everybody realizes it. But I'll just try to do 3-4 minute segments of things I'm seeing in the market and just show you, what I think about it, what you should be listening to, what you shouldn't be listening to. And we provide a lot of free content on these sites for people who aren't familiar with our brand in hopes that you guys will one day subscribe to a lot of our amazing products. So, guys, that's it for me. Thanks so much for listening. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.